weekly roundup on the energy complex. Starting with crude oil, we have seen that both domestic and international crude prices have been steadily inching higher. If you look at the current scenario, then WTI crude, which is mainly traded in NYMEX in the US, is close to $59, and Brent crude is close to $68. So both have been performing pretty well over the short to medium term. Crude has recovered from recent lows of around $54.5, mainly on account of the decline in inventories or the decline in production, mainly from OPEC and OPEC plus countries like Russia and others, which have in totality cut about 1.2 million barrels from the market. The compliance level has been very close to almost 94-95% as per the latest OPEC reports and the IEA reports. So basically the decline in production has led to a stoppage in the one side lower bias which we saw last year, at least in the last 3-4 months of 2018. Towards December, we obviously saw WTI crude prices cracking towards $40-41 and Brent crude heading towards $50. But then that trend has sharply reversed, and we are already close to 35 to 40% higher from those levels. So this uptrend which is in place right now since the last 3 months almost is likely to sustain. And going forward, what I expect is that as far as WTI prices are concerned, we could see it going beyond $64. Domestic prices could head higher towards 4,300 to 4,350 odd levels on MCX. Even Brent crude could cross the $70 mark easily. We could head towards $72 initially. So what have been the factors driving this upsurge? As already mentioned, the decline in production is now starting to take effect. We also have the sanctions on Venezuela and on Iran. The Iranian sanctions will come into effect from May, so we are very close to that, but the market obviously starts factoring in these things beforehand. Venezuelan production has also declined to multi-year lows of close to just 3 lakh barrels per day, which is impacting which is currently impacting supply. So a cut in production by OPEC and Venezuelan production falling to multi-year lows because of various factors, economic problems which the country has been facing, along with the sanctions because of the recent political events which took place in that country, have led to support on every dip for crude prices, and we have seen this upsurge. One thing which is countering this is the huge upswing in American crude oil production. We have already seen that it is exporting a record number of barrels, almost close to 6.5 to 7 lakh barrels it's exporting of crude and crude products and other liquids. So shortly it might turn out to be the largest exporter of petroleum and petroleum products. Also it has become the largest producer, so US is now the largest producer of crude oil, standing more than 12 million barrels per day, so it's almost 12.1 right now. We have seen the production surge by more than 2 million barrels in the last 6 months. So this is one factor which is offsetting the decline in production by OPEC and OPEC plus countries. But when the market did fall in the last quarter of last year, it did factor in an upswing in US production. So the current upswing is to a very large extent factored in, and now the market is mainly focusing on the cut in production by OPEC plus and Venezuelan production cut, along with the prospective decline in imports from Iran, which could be huge because Iran still produces about 2% of global consumption every day. Also, the demand is expected to be robust. People were factoring in the worst that demand could slow down, but right till now, there's no such impact. US crude oil inventory since the last almost 3 to 4 weeks now have seen a persistent decline of on an average close to 2 to 3 million barrels per week. So that is putting some pressure on prices. So going forward, broadly, crude oil will be supported with immediate support coming around the recent lows of $55 in WTI and around $64 in Brent. On MCX, 3800 would remain a pretty crucial support. On the higher side, as far as MCX is concerned, as already mentioned, 4350 could be an immediate target. For WTI, I reiterate, $64 could be on cards, and as far as Brent is concerned, $72 could be seen shortly. So the basic outlook on crude oil is bullish for the next at least 2 to 3 weeks.